Hello everyone. Welcome back to your Money Your Way YouTube channel. In this video, we're diving into Frasers Centrepoint Trust, a major player in Singapore's vibrant real estate investment trust sector. If you're looking for stable income and exposure to Singapore's resilient suburban retail market, you've come to the right place. Please note that the content presented in this video is for informational purposes only and does not constitute investment advice. We strongly recommend that you seek proper guidance from a qualified financial advisor before making any investment decisions. We'll dissect FCT's historical performance, dividend payouts, tenant strategy, and its position within the competitive Singapore REIT landscape. Let's get started. First, let's examine how FCT has fared financially over the years. Established in 2006, FCT has built a significant portfolio, primarily focused on suburban retail malls, strategically located near residential areas and transportation hubs. Historically, FCT has demonstrated a relatively stable revenue stream, underpinned by consistent occupancy rates across its portfolio. As of 31st March 2024, FCT reported a high portfolio occupancy of 99.9%, significantly above the sector average. However, recent financial results for the first half of FY 2024 showed a decrease in revenue and net property income (NPI) compared to the previous year. Specifically, revenue decreased by 7% year-on-year to 172.212 million Singapore dollars, and NPI decreased by 8% to 124.612 million Singapore dollars. This decline was primarily attributed to the divestment of Changi City Point in October 2023 and the ongoing Asset Enhancement Initiatives (AEI) at Tampines 1. Excluding these factors, both revenue and NPI would have shown positive year-on-year growth. Despite these temporary headwinds, FCT's historical PB ratio of 0.93x is in line with its historical average, suggesting a reasonable valuation. The REIT has also actively managed its portfolio through strategic acquisitions and divestments to enhance its long-term value. For instance, FCT recently announced the acquisition of North Point City South Wing for a total cost of approximately 1.17 billion Singapore dollars, a move expected to further solidify its dominance in the suburban retail sector and be mildly DPU accretive. For many REIT investors, dividends are a key attraction. Let's explore FCT's dividend payout history and trends. FCT has a track record of distributing dividends on a quarterly basis, typically in May and November. While the distribution per unit (DPU) can fluctuate, FCT has generally aimed to provide a consistent income stream to its unit holders. For FY 2024, the full-year DPU was 12.042 cents, a slight decrease of 0.9% from the 12.150 cents in FY 23. This marginal decline was mainly due to a larger number of outstanding units and lower NPI, partly offset by higher distributions from joint ventures. Looking ahead, the estimated cumulative distribution for the period from 1st October 2024 to 3rd April 2025 is 0.0615 Singapore dollars per unit, with a pay date of 30th May 2025. As of 17th April 2025, FCT's trailing 12-month dividend yield stands at an attractive 6.30%. While past performance is not indicative of future results, FCT's focus on necessity spending and essential services within its malls provides a degree of resilience that can support future distributions. A well-diversified tenant base is crucial for a REIT stability. Let's analyze FCT's tenant mix. FCT's retail portfolio boasts over 1,700 leases across its properties, which include major suburban malls like Causeway Point, NEX 50% interest, Tampines 1 and Waterway Point 50% interest. A key strength of FCT's tenant strategy is its focus on essential spending, food and beverage and essential services. This strategic focus helps to create a resilient income stream, less susceptible to economic downturns compared to discretionary spending-focused malls. The portfolio maintains a healthy lease expiry profile, with 22.7% of leases expiring in FY25 and 29.1% in FY26, based on gross rental income as of 30th September 2024. This staggered expiry profile mitigates concentration risk and provides a steady stream of renewal opportunities. FCT has also demonstrated strong rental reversion rates, achieving 7.5% in the first half of FY24, indicating its ability to command higher rents upon lease renewal. Let's place FCT within the broader context of Singapore's real estate sector and REIT market. FCT is one of the largest suburban retail mall owners in Singapore by net lettable area. Its strategic focus on suburban locations caters to the large residential populations outside the city centre, benefiting from consistent foot traffic driven by daily necessities and convenience. This positioning differentiates it from REITs focused on prime downtown retail or other property sectors. The recent acquisition of North Point City South wing further strengthens FCT's dominance in the suburban retail segment, increasing its market share of overall NLA. This acquisition is expected to unlock further value through potential asset enhancement initiatives and tenant remixing. In a Singapore REIT market known for its stability and attractive yields, FCT stands out as a pure-play suburban retail REIT. While it faces competition from other retail REITs, its focus on necessity-driven tenants and strategically located malls provides a degree of defensiveness. Analysts generally maintain a positive outlook on FCT, recognizing its strong fundamentals and potential for long-term growth in the resilient suburban retail sector. In conclusion, Frasers Centrepoint Trust presents a compelling investment proposition for those seeking exposure to Singapore's stable suburban retail market. Its historical financial performance demonstrates resilience, and while recent results show temporary declines due to strategic divestments and AEIs, the underlying fundamentals remain strong. FCT's consistent dividend payouts, diversified tenant base focused on essential spending, and dominant position in the suburban retail sector make it an attractive REIT to consider. Hope you like this video. Thank you for watching. Remember to like, subscribe, and hit the notification bell for more in-depth market insights. See you in the next video.